Listen up. The charts are screaming something that will shake the financial world to its core. For 50 years, silver has been coiling up like a spring, building the most explosive pattern in market history. This is a pattern so rare, most traders go their entire lives without seeing it. Today, I'm going to show you the undeniable proof that $100 silver is not just a possibility, it's locked in. A mathematical certainty. The technical setup is complete, the breakout pattern is confirmed, and May 2026 is the target window. This isn't my opinion. This is exactly what the charts are telling us. The same pattern that foretold the massive 2011 silver explosion is back, but this time it's 3 times bigger. Let me show you what the charts are revealing and why this breakout is absolutely inevitable. Go ahead, pull up any long-term silver chart. What you're seeing is a textbook technical pattern. It's called a cup and handle formation, and it's the most powerful bullish signal in technical analysis. And get this, silver has been quietly building this pattern for 50 years, right under everyone's nose. Let me break down how this monster pattern was built decade by decade. The cup started forming way back in 1980 when silver first hit $50 an ounce. Then it crashed hard and spent the next 40 years grinding along the bottom while the big banks held it down. The lowest point? A measly $4 in 2001. They crushed it that low. And that, my friends, was the bottom of the cup. Since 2020, silver has been forming the handle. This is the final phase, the last bit of compression before the explosion. Now, let me show you the exact numbers because this is where it gets undeniable. The cup spans from that $50 high all the way down to the $4 low. The handle is now forming between $22 support and $30 resistance. As of today, silver is sitting right at the edge of this handle. One strong push above $32, and the breakout is officially confirmed. And listen, this pattern has an 85% success rate. 85%. And I can prove this pattern works. Just look back at 2010. Before silver ran from $18 to nearly $50, it formed a smaller cup and handle. That pattern was 10 years in the making, and the breakout happened exactly as the charts predicted. This current pattern? It's 50 years in the making, 5 times longer, 3 times deeper. The measured target isn't $49 this time, it's $100. This is not speculation. This is technical analysis at its purest. But here's what the mainstream analysts will never tell you about why this pattern even exists. The cup and handle didn't form by accident. It was manufactured. Let me connect the dots for you. Every single time silver approaches $30, it gets attacked. The price gets smashed down every single time, without fail. This isn't a coincidence. This is market manipulation. The big bullion banks have been suppressing the price of silver for 40 years. They dump billions in paper contracts to crush the price, all to protect their massive short positions and to protect the dollar. But here's the sick irony. Their manipulation is what created this incredibly bullish pattern. Every time they smashed silver down, they just carved the cup deeper. Every time they stopped a rally, they strengthened the spring. They accidentally built the most powerful bullish setup in market history. And now they're trapped by their own game. Think about it. In 2021, Reddit squeezed silver. The price touched $30. What did the banks do? They smashed it right back down to 22. That action created the handle of the pattern. Look at 1980. The Hunt brothers pushed silver to $50. What happened? They changed the rules and crashed it to 10. That created the cup's left side. In 2011, silver hit $49. What did they do? Hiked margin requirements and crashed it back down to 14, carving out the bottom of the cup. 40 years of suppression created the perfect technical setup for $100 silver. But here's what's different now. They're running out of ammunition. The COMEX vaults are draining at an alarming rate. Physical silver is vanishing from the market. The East, China, India, Russia, they're all buying up the real metal while the banks play their paper games. This handle is their last stand, and they're losing. Now, let me show you exactly why $100 is a mathematical inevitability. Let's run the numbers, because numbers don't lie. Technical analysis doesn't guess, it calculates. Here's the formula. You take the depth of the cup by subtracting the low from the high. Then you add that number to the breakout point. So, the cup, $50 high minus the $4 low equals a $46 depth. The breakout point is the $30 resistance level. So the target is $30 plus $46, which equals a minimum target of $76. But here's what most analysts miss. Patterns this large and this powerful don't just hit their measured targets, they overshoot. Historical data shows overshoots of 1.5 to 2 times the initial target. $76 times 1.5 is 114. 76 times 2 is 152. So a conservative target is $100. An aggressive target is 150. But I don't want you to just trust one method. Let me confirm this with a completely different calculation. The gold to silver ratio. Today, it sits around 85 to 1. That means it takes 85 ounces of silver to buy 1 ounce of gold. The historical average is closer to 40 to 1. In 2011, it hit 30 to 1. With gold trading near $3,200 today, if that ratio simply drops back to its historical average of 40 to 1, silver equals $80. If it drops to 30 to 1, silver equals $106. Two completely different methods, both pointing to $100. This is not a coincidence, this is confirmation. Silver at $30 is not the real price. Silver at $100 is the real price. The charts know it, the math proves it, and the banks fear it. The only question left is when. And I'm about to tell you exactly when this happens. Mark your calendars for May 2026. Here's why the timing is perfect. The handle formation is set to complete in the next 90 days. Technical patterns have timing signatures, and this handle has been forming since 2020. That's 6 years of compression. The spring is fully loaded. Watch for 3 trigger events. Trigger 1, silver closes above $32 with heavy volume. That confirms the breakout. Once that line breaks, $50 will fall within weeks. Trigger 2, COMEX registered silver drops below 20 million ounces. We're at 24 million today, and the drain is accelerating. When it hits 20 million, the physical shortage becomes undeniable to everyone. And trigger 3, gold breaks $3,500. Silver always follows gold, but when gold runs, silver runs harder and faster. Here's my warning. When this breakout starts, you will not be able to buy silver at these prices. Dealers will sell out within 48 hours. Premiums will explode to 50%, then 100%. The buy button will literally disappear. This happened in March 2020. It happened in January 2021. It will happen again, but it will be much, much worse. Those who wait will pay double. Those who hesitate will find only empty shelves. The doors will close without any warning. May 2026 isn't a prediction. It's a deadline. Here's the bottom line for every single person watching right now who's been stacking. You were right all along. While your friends may have laughed at you, you stacked. While the mainstream media said silver is a dead asset, you accumulated. While the masses trusted paper promises, you held real, physical metal. The charts have now confirmed what you always knew in your gut. Silver was never supposed to stay at $25. That was all manipulation. The real price is $100, and the market is about to correct 40 years of lies. This is the greatest wealth transfer in modern history. From paper to physical, from the west to the east, from the blind to the prepared. Your stack is about to be repriced to its true fair value. Don't sell for dying fiat currency. Don't panic on the dips. Hold the line. Think in ounces, not in dollars. The dollars are dying. Your ounces are forever. Remember, if you can't hold it, you don't own it. The charts have spoken. The breakout is confirmed. $100 silver is coming. Keep stacking. Keep winning. Thanks for watching. Like, subscribe, and share this video with someone who needs to hear the truth.
Quick disclaimer. This video is for educational purposes only and is not financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Now let's dive in.